so in love with you.
Welcome back to Real Estate Mindset. So here's all the recent articles about the housing market right now, you guys. Now we have more and more articles that are coming out every single day that is basically now forecasting a possible housing crash for various reasons. Now, what we're going to look at is what Market Watch has recently reported, basically pertaining to a 25% decrease in the demand of real estate. Now, as I've been saying on my channel, y'all, and you've heard this, I believe the biggest threat to the US housing market right now is affordability, or rather the lack thereof. So today what we're going to do is we're going to look at several articles that go into the recent interest rate surge and what that's going to do to the housing market. Is that great news for buyers? Will there be more inventory? Is it too late to sell your property if you're a seller? Stay tuned as we dig in right now. All right, guys, here we go from Market Watch. The popular spring home buying season is just ramping up, but one analyst is warning that it could be a bust. Ian Shepherdson, chief economist and founder of research consulting firm Pantheon Microeconomics, is predicting a dramatic fall in the pace of home sales this year. In a research note, he projected that existing home sales will drop roughly 25% from the annual pace of 6.02 million set in February to a rate of only, here we go, 4.5 million by the end of summer. He goes on, the housing market is in the early stages of a substantial downshift in activity, which will trigger a steep decline in the rate of increase of home prices, starting perhaps as soon as the spring. Shepherdson wrote in a research note distributed on Sunday. Basically, what he's saying is throughout the year, there's going to be a 25% decrease in demand for buying homes. That's a pretty huge number, and he may be even conservative. And what that's also indicating, you guys, is homes will sit on the market longer. When homes sit on the market longer and don't go under contract, usually what it's going to happen is the sellers are going to reduce their listing price. So that actually may be good news if you're a buyer and you've been frustrated. Let's continue reading. As evidence of this expected slowdown in home sales, Shepherdson pointed to the mortgage demand. The most recent data on mortgage applications from the Mortgage Bankers Association shows that a number of applications for loans used to purchase homes is down more than 8% compared to a year ago. Comparatively, demand for refinancing has dropped nearly 50% versus last year. A drop in mortgage demand could predict a downturn in home sales, since most buyers rely on financing to make such a large purchase. Issues around affordability are likely to blame for the decline. As of Thursday, the average interest rate on a 30-year fixed-rate mortgage surpassed 4% for the first time since May of 2019, according to Freddie Mac. Per Shepherdson's calculation, the rise in mortgage rates since September has increased the cost of a monthly mortgage payment to a median-priced home by more than $400. Here's what it is essentially saying, you guys. Consumer confidence is at an all-time low. Now, hopefully what that will do in turn is remove a lot of the FOMO that's kind of governing and pushing the market right now, or fear of missing out. So we're hoping that the consumer confidence versus FOMO, let's get rid of FOMO. But also, you guys, be aware that September of last year, mortgage payments just on average through the nation are going to be up $400 on just your mortgage payment. Now, that's not counting school loans starting. That's not counting EIDL loans starting, increased property taxes, increased food costs, and increased gas costs. So you guys are going to need to be really, really aware of those types of things if you decide to purchase a home right now, which is essentially at the peak. Now, let's continue reading. The ripple effects of a shift in existing home sales would be far-reaching, Shepherdson said, arguing that a pace of recent increases would eventually slow and perhaps even reverse. It also would spread to new home sales, which he expects will likewise fall. A decrease in new home sales would represent a downward drag on GDP, since that would implicate less demand for services tied to home building and less spending on items like building materials and appliances. The bad news for any Americans who persist in trying to buy a home under these conditions is that it's less clear how this situation will ultimately impact the availability of homes for sale. Part of why home prices have surged is that there is a significant lack of inventory in the housing market, which has fueled competition for what few homes are listed. So essentially, you guys, what this is saying is the lack of affordability is going to be widespread. It's going to be going across the nations. And what I'm assuming is this is probably going to hit at least a slowdown in the market or a market crash or loss of equity. It's probably going to hit the cities with the biggest bubble with the least amount of jobs. So that's what I'm thinking. So it'll be widespread, but also what it's indicating is what I have been saying. There is a massive, massive lack of inventory in the housing market. And that is one of the major reasons the housing market is still going crazy. Despite that reason, also obviously the stimulus, the free money, the PPP loans, the really super low interest rates. So it has propped up this market that is as you can see now, and this is what I've been saying, it is a house of cards fixing to fall. Okay. But again, what do you do with this information? You need to prepare. Now let's continue and let's read another article right now. Okay, guys. So this is from Bloomberg. And as you can see, this is March 22nd. So this is tonight as I'm doing this video. Here's what it says. Federal Reserve hawks and doves are joining Jerome Powell's call to get going on raising interest rates to curb high inflation. About time. Am I right? Geez Louise. The chair's speech on Monday, his first on his own behalf since a press conference last week when he spoke for all officials, explicitly put a half-point hike on the table in May if needed. So what he's doing essentially here is he's putting it out in the market. He's letting investors know. He's letting you know and a lot of other people that instead of the original, well, it's not really the original, but since the war with Ukraine and Russia, they changed to a 25 basis point rate hike strategy. So he's basically now saying instead of 25 basis points, he's going to go up 50 basis points, which I have been saying is really, really needed if we're going to curve inflation, if we're going to rip the Band-Aid off, let the wound air out, right? We really kind of need a 50 basis point hit. So is that good if you're a seller? If you're thinking about selling your house, it's probably never been a better time to sell. Let's continue reading. Treasury yields surge in the aftermath of Powell's remarks as investors increase bets on how many times the Fed will raise rates in 2022. And even erstwhile doves like San Francisco Fed President Mary Daly now backs the robust action. Sounding like Zillow. It's time to remove the accommodation we've been providing, Daly said Tuesday during an event hosted by the Hamilton Project at the Brooklands Institution. That means marching up to neutral and looking at whether we need to go over neutral. So tightening a little bit, restrict the economy to ensure that inflation comes back down. Very good, Federal Reserve. I'm loving what I'm hearing. Daly said the economy remained fundamentally strong despite headwinds that include uncertainty and surging energy and commodity prices since Russia invaded Ukraine. That echoes the sentiment voiced by Powell that it can handle tighter policy. Basically, what they're saying here is they're going to tighten up the economy and they understand inflation is super duper bad right now. Thank you for acknowledging that. As you guys are starting to see now, there's more and more news outlets that are essentially saying what I've been warning you guys about for the last month, which is to prepare for a recession, prepare for the housing market to turn into a buyer's market. Best time to sell. If you're in the market to buying, again, maybe now is not the best time. Have the right mindset if you do purchase a home. That's really key. Now let's go on and continue reading. Powell's speech Monday was designed to essentially tee up a 50 basis point hike at the May meeting. So you guys, the 50 basis point hike is probably not going to be taking place until May. So that's a little bit of good room as far as breathing room for mortgage payments and such, said Robert Dent, U.S. economist at Nomura Securities, who is predicting consecutive half-point hikes at May and June Fed meetings. So that would be a total of a full percentage or 100 basis point increase in May and June. So you guys be aware of that. Participants are now showing increased urgency to not only bring inflation under control, but also labor markets to prevent a wage price spiral. That's really key, you guys. St. Louis Fed President James Bullard dissented in favor of a half-point hike and commencing roll-off of the Fed's massive $8.9 trillion balance sheet. It's kind of like, what just happened from when you guys met and released your information out on Wednesday till today. Maybe something's happened that we don't know, or maybe what it is they're finally being forced to acknowledge the ridiculous amount of inflation that we're in, even prior to the war. We haven't really even felt what I believe is going to be the worst of the gas prices, the food prices, and things like that. We haven't even felt the return of school loans or EIDL payments. So there's a lot coming. Let's continue reading, guys, and then we're going to take a look at the yields, and then we're going to conclude this video. Now, this is a breaking news headline from CNBC, and just look at the article name. Mortgage rates are surging faster than expected, prompting economists to lower their home sales forecast. So you guys see what I was saying about Zillow? Why is Zillow expecting a 22% equity increase this year? It is completely wild to believe into Zillow. You guys also saw that I brought CoreLogic. We talked about CoreLogic, who estimates a 70% likelihood of a housing crash in certain metro areas. Now, you guys remember, I'm bringing you all this information so that you can plan accordingly and figure out what to do. As you know, I'm a loan officer in Texas and I'm a realtor in Houston. So it's always in my best financial interest for people to buy. But what I'm saying right now is you may not want to buy. And if you do, you better have the right mindset. Overall, I'm not buying. I'm currently renting right now, and it's driving me crazy, but I want to be patient. Better no deal than a bad deal. Let's continue and let's look at the yields right now. Okay, guys, so here's the yields as of the 22nd, which is tonight at 7:06 p.m. Eastern time. Now, remember, what we're doing is basically comparing everything to the 10-year yield. Okay, this is a 10-year Treasury yield. It's yielding a whopping 2.38%. Now, you've seen this way lower. And what we're doing is we're comparing the other 5-year to this. You can see the 5-year is now over the 10-year. The 3-year here is even, okay? So what we're really looking for as far as a recession indicator is the 2-year. A lot of people are looking at the 2-year. If the 2-year yield goes over the 10-year yield, that's really a huge indication of an incoming recession. That alone has predicted, I believe, 9 of the last 12 recessions. But what is essentially a guarantee recession coming is the 3-month. So take a look at that 3-month. As you can see, there's a big difference still between the 3-month and the 10-month. This doesn't necessarily need to be inverted for there to be a recession. But you guys, it kind of brings me into my next point. The second biggest concern that I told you guys that I had as far as the housing market is lenders restricting their guidelines. I believe it's a little bit necessary. Like I said, we need some FUMO out of the market. We kind of need people just to pause just for a second so that if things can adjust and get back to normal as we get out of the COVID. Now, let me give you guys my opinion right now. Now, just remember, I'm not a financial advisor. I'm an opinion sharer. Now, this is what I'm going to give as far as my opinion if you are possibly thinking of selling your house. I don't think it's too late to sell your house. I still think it is an excellent time, probably the best time in the history of the housing market to sell your house. But that doesn't mean that you need to sell and then purchase another house. In fact, what I did is I didn't sell, but I turned my home into a rental and I'm renting now because I refuse to purchase something that's basically too much that I don't absolutely love. Okay. So if you're a seller, you still have time. If you're thinking about selling your house, sell your house. It doesn't mean that you need to buy another house. Okay. Now a little bit more details. If you're a buyer, what I really need you guys to do is beware of an incoming recession, okay, which basically is going to put a lot of strain on our thriving job market. So not only will we have an increase in the cost of living, but your job may be in jeopardy. So try to keep your job. Obviously, that goes without saying, but be the best employee you can. Continue to save your money. Continue to be patient. And in the meantime, what I want you to do, especially to counter any tightening restrictions with lenders, I want you to build your credit to the absolute best it can be. Usually a good way to do that is utilization ratio, which is essentially meaning have all of your credit card balances under 30% or up to 30% of the credit line. Okay. Now, y'all, that is just my opinions. I really hope these videos are helping. As always, like the video, subscribe to my channel if you haven't. Please comment below. Let me know what you think about this video. Let me know what you think about this content. Good luck out there, and I hope you win.